Okay, good afternoon, guys. Welcome to this live trading clinic. My name is Steve Ruffley. You should know that. So today we're going to go through, I guess, mainly a lot of the fundamentals, what's kind of driving the markets right now. So we've seen some pretty extreme moves. Interesting that the stocks, when we started to talk about the US shutdown, didn't really kind of react until a few days later when we saw the real kind of threat and the real kind of aftermath come out. Obviously, there's been some huge moves in gold. Again, I've been saying this for a long time. I reckon by 2015, gold will probably bottom out around about $1,000. So I've said this for quite a while. Interesting things going on in the markets really right now. It's been very quiet today. I think after that kind of we really aggressively tried to push lower yesterday in the indices. We've kind of really, the dip buys have come back in force, and as the world's not really ended over this US shutdown, I think we've got a lot of value buyers and they've just kind of stepped in, especially with that backup of the Fed saying that quantitative easing is going to be around and that we didn't reduce it. So, real mix of long-term, short-term investors right now, speculators. I don't think we see any kind of major short-term speculators market right now because we are quite quiet and volumes are fairly low. But there we go. I mean, the majority of things are positive across the board at the minute. For how long? Not too sure. Obviously, we've got the problem of non-farm payrolls being suspended tomorrow because the Bureau of Labour Statistics, obviously a government department. So lots of things going on, lots of things kind of affecting the markets right now. So an open forum, as always, guys. You know, any questions or thoughts you guys have got on the US economy, or any questions at all on the fundamentals, type them through. Let's have a chat. Any technicals you want to look at, of course, let me know. And as normal, I will go through the chart. Again, I sent some technical analysis out this morning that featured an FX Street, and I highlighted again the problems in Spain and the youth unemployment. So still lots to talk about, still lots of decisions to be made, I guess. So let's run through the main parts and the risk warning as always. The spread betting, CFD trading both carry a high level of risk or capital, resulting in losses that exceed your initial deposit. That is true for everyone, so please ensure you fully understand the risks involved. The information and comments provided herein under no circumstances to be offered a solicitation to invest. Nothing herein should be construed as investment advice. Information provided is believed to be accurate, the date and time it's produced. Education only, content of webinars, personal opinion of the moderator, not intro.com. The content is not constitute financial investment or tax advice. Intro.com does not accept any liability if the content comments made during the session. So again, live charting analysis. We'll go through multiple time frame trading, only way I know how to trade. Fundamental analysis, any views you've got, guys, type them through. And I've got my account open. See any trades, we're going to jump on. Questions, as always, guys, do please have that interaction. That's what makes these particular sessions, so very interesting for people. So we've got the markets right now. Again, based upon the analysis I sent over to FX Street today, we can see that really the market, the S&P, again, it was very, very funny. It was more in the DAX, to be honest. I'll show you exactly what I was looking at. Again, on the hourly charts, I could see that we really, there wanted to be a kind of an aggressive sell-off after we rejected the close above the moving average. And for whatever reason, in this part here, you could have sold here, never really gone offside. But I decided to sell here. Okay? So I started to sell here, but for whatever reason, I didn't. I hesitated because I thought a good break of the Bollinger Band. I've got this big blue area where I know there's plenty of buyers ready to spring the market back. I just didn't press the button, and I saw the market go down 50 ticks. I didn't do anything. And I saw it stop just outside the blue line, didn't buy it, didn't do anything. It came straight back to here. Very, very funny, isn't it? Well, sometimes that we have all these technical ideas and we see markets very, very clearly, you don't press the button. But we can see that really DAX, it's happily closed this gap here. We made our way higher towards this level up here, 8715.5 in the DAX, and then really the market's just gone sideways. So we're finding good kind of support down here, all right, at 8616.3. So really now it's what we have to kind of look from the bigger picture. What's the DAX going to do? I mean, realistically, DAX hasn't got a million miles to go before it starts hitting, 9,000, some big kind of, technical levels. But I don't know, I just can't see it personally. I can see it happening, but I can't see it sustaining and be able to stay above 9,000. So there's clearly a lot of dip buying in the market. Clearly a lot of strength within the market. The market still has an uptrend. People like George Soros are coming out on the wires yesterday saying that the Eurozone crisis is over. I mean, obviously, George Soros knows a bit more about trading, I guess, than I do, but I'm not quite sure where he's heading with that and what his reasonings behind it are. So really, we're just in this kind of range in a DAX right now, and we're trying to figure out the next push. Is it going to be up or is it going to be down? As soon as we break through 8559.5, then we've got a lot of levels to start hitting, 8476 and 8359. So for me, I'm looking to sell into the weakness, but I mean, just as this candle proved here, that if you don't get it right and the market can't continue that move downwards, all the longer term and the bulls will come back in and buy up them dips. So once we stop doing that, okay, we stop seeing the tails on the bottom, we see full candles, this market's coming down. So I don't really know when it is going to come down, but it inevitably will start to get that downward pressure at some time. We can't remain at these high levels for me, based upon the fundamentals and what I've seen out of the Eurozone. So that's the view on the DAX. So yeah, starting off with the S&P. Now again, same scenario in the S&P, that when we saw that aggressive sell-off, the market hit this double level of good support here at 6180 spot 25 and 1679, and then all the way down. There's this lovely double bottom. Remember, these lines are in place and have been for months, so they're not a coincidence that this was the bottom at 1673 in the S&P. And again, the market's opened up over last night and then came down, touched this point again, and continued to buy up. So we're right back in the middle of this range, okay, of the S&P at the minute. So again, we're right in the middle. I still think we're going to have to come down from here. And again, the pivotal point for me is this key level at 168550. Just a lot of the higher time frame things pivot around here. We're just still trading below the moving average on the dailies. So I mean, even if you did a Fibonacci, our old friend from that's the right Fibonacci from the low point that we traded a couple of days back to the high point. Again, the 50% level comes around, to 1679 really. So we are trading above it, and we've closed above it and rejected that push lower. So I think in the short term, we're still likely to push up and to hit these highs around 16850 certainly, and 16925. But if we don't see the buyers come into the market and aggressively push it back up, I really do feel that the markets have to come down. And I still think, the blue areas I've highlighted down here are more realistic targets of wherever the S&P should be trading right now, to be honest. Again, there still seems to be some good news out of Apple. There still seems to be a relative amount of positivity within the kind of world financial markets. But I don't know if this is just... It feels to me it's just an after effect of quantitative easing, and that every measure the government's done and every bit of money they've pumped in, they feel it's working. I don't see it that way. It just hasn't not worked. Okay, so we still don't have the growth, we still don't have the employment, but the world's not collapsed. So I don't really see that as a victory, okay? Because everybody that has money is just surviving. Anyone who doesn't have money, they never had any money anyway. So, what have we got to complain about? It's the middle section that's getting squeezed. The ambitious people, the people who want to move on, the people who want to progress in the jobs and, progress in the housing ladder, etc., etc. They're the people that have kind of stagnated. So the poor people just remain poor, the rich people remain rich, and everybody else just has to kind of get on with life. So the economic conditions are not conducive to that. We're still seeing inflation, way above target. It does, you don't have to be a rocket scientist, you don't have to know anything about economics to know that you go down to the shops and things are more expensive. The cost of living has gone up, and what supported it by jobs and pay rises hasn't. So pound for pound, we're a lot worse off than we were, 5-10 years ago. And that's rippled through the entire world. It's not, it's not just confined to the UK. So for me, the fact that the world hasn't fallen over, quantitative easing still exists, it's still going to artificially inflate the market and keep them dip buyers in play. The second quantitative easing, as we've seen, it's going to be reduced, or we talk about tapering it, then it's game over. This market's just going to go into free fall. And I think everybody knows that, and the US especially know it. And that's why they're so petrified about changing the stance on the quantitative easing. So it's a real tipping point, really. I don't see what's going to bring us out of this economic depression just yet. Things are certainly better than they were, but they're not. We're not certainly in the boom cycle just yet. Okay, Manjo. Hi, Steve. You said earlier that the volumes are down today. Could you let me have how you determine volumes in FX? Yeah. Well, I mean, the volumes are low because you see on the dailies candles like this. Okay, so when there's low volume, there's not that many people trading. Okay, so when you see like the big wicks and small bodies, it's not indicating great amounts of volume. If you use MetaTrader, just do properties, right click, common, show volumes, and it'll show you the volumes. So volumes, back 10 days ago, they were a lot higher. Volumes today, minuscule. Okay, so that's just how you do volume. That easy. So you just look at your dailies, that's the volume of yesterday. Huge. We've traded a third of that, maybe a quarter. So that's how you indicate that the volumes are. Okay, yes, you're right, Steve. It takes some time for us to get out of the woods. Yeah, well, I think so. I mean, it's a politician's job, isn't it, to say that everything's working and, the particular party that's in power has done much better than the previous party that made all the troubles, so we've come in to sort it. We haven't sorted it yet, but give us time. Vote us in again, and we'll make sure we do it. And they'll go on another cycle. Maybe there'll be another 4 years of bad times, then it'll get good. Oh, well, aren't we brilliant? Then it'll get even better. Yeah, we're all saved. Then it'll get bad again. I mean, these are just cycles. If we have a long enough time frame, then, everything, on a long enough time frame, everything dies. But on a long enough time frame, things go up, things go down. So it doesn't really matter. We're looking at the here and now. So, especially when we talk about trading, that's why you have to look at the right kind of time frames and candles. If you look at a 5-minute chart, you're just going to get too much information. You're not going to get a solid, clear view of what the market can do. So look at your dailies, as I always say. Look at your dailies and see what's happening. Consolidation in the Euro stocks. Okay, market's moved up, so we've got a pennant type symbol here in the daily candles. Okay, so look at that on the hourlies. What clues could that give you to trade? Okay, so support. Really, the Bollinger Band's consolidating, so we're going to get a break. We're going to get a break at some point. So we're talking about Bob levels. They're going to be here. Okay, 2896, break or bounce. Market's going to hit this. It's going to break. It's going to go down to 2858. Can't do anything else. So from here, it's going to break low and go 46 ticks. Or it's going to break the upper end of the Bollinger Band and hit this next level. It's going to go up 36 ticks. So 2942. So in the Euro stocks, you've got one or two bets, one or two trades. Okay, you either take a short position or a long position, round about here, wait for a Bollinger Band break and hold on. So it will do one of two things. So you've got, a little bit more room on the downside than you have the upside. And again, it looks a little bit more like it's going to go up, doesn't it? Yeah, market's gone down, lower high. So it depends how you interpret it. I see that the market's really flatlined here. Okay, so nobody wants to sell past here just yet. So I'd expect that the market from here is going to break up. Yeah, it just looks that way to me. It looks like the market's going to break, the Bollinger Band top here, and it's going to hit 2942. Again, you can see typical things that when the markets start negative and go positive, they go overly bid in the American markets, don't they? So we see these wicks like this, and then see the big green candle after. So I wouldn't be surprised if the DAX, again, targeted 8740. Don't think it'll get there today, but it may do. We've seen the FTSE go, particularly bid, so a lot of strongness in the UK market. So really, for me, the value right now would be the Euro stocks. Now, do I want to buy any Euro stocks, having said all that? That is the question. Okay, so the way I taught myself through this trade is that nothing's really moved. Okay, so I don't like it when things don't move because I don't like that slow grind. I like the momentum to go with me and to get on the back of other people doing my trade. So double bottomed at 1670. Market's come up above the low end of the Bollinger Band, below the daily moving average. Let's look on that hourly chart. Hourly chart, 1, 2, 3, 4 green candles. Support at 12875. Clear defined target at 1685. 2 Fibonacci's. What's going to come out of the shutdown of the government today? Nothing's really been said. They're talking, and Obama's, open to suggestions, but nothing's really kind of budging. So is that good news? Right. Tough one. No. Do you know what? No. I don't think I'm going to buy. No, I don't want to buy the Euro stocks. I don't want to buy the Euro stocks here. I think, we could see a blip up, but I don't want to. I don't feel the confidence in it, and it just doesn't feel right. So, no. I think the likelihood is that we're going to break back into this range in the S&P and kind of trade more down towards 168.25. 168.025. Yeah, I just don't feel bullish in the markets at all, to be honest. Yeah, I think the market has digested the political standoff, but when you look at the markets like this, the futures market, it's what are the traders going to think tomorrow? We've got non-farm payroll, the biggest figure in the month, not being released because of the shutdown. ADP, which is a precursor to the non-farm payroll, was dismal, as quoted in the Times. So that's not good news. So why are we spiking? Why is the markets going up? Just because what Berlusconi out of Italy has said he'll step down and get out of the politics. Who cares about Italy? Nobody cares. I don't care about Italy. So that's not going to push the US markets up. So right now I think it's just a bit of relief buying that the world hasn't ended, and the US are being quite un-American about this and being quite diplomatic and just really kind of talking about it. And we're not seeing, the political shenanigans and, the hysterical nature that we could see out of the US. They're actually just kind of sitting down and getting on with it. So I think that kind of confidence is pushing the market up. But the underlying fact is, the longer this goes on, the more bad news it is for the economy. It's stopping money flowing through the economy. It's stopping people working. It's affecting and impacting people's lives. So it isn't good. So I think for me, if we do go green, then I'd be looking to sell round about these levels. So we're going to have 1, 2, 3, 4 green candles. So maybe 4 or 5. So we've got another potentially 28 ticks or so for the S&P to go up. And then what I'd do is I'd be looking to sell these levels up here. Fairly small size, to be honest, because nothing would surprise me if the market overextended to here and here, but I wouldn't get out of the position. I'd be selling my entire account, averaging all the way up, and then expecting to get back down. That's the only way you can trade these markets at the minute. Start with small size and average. If you start putting big positions on, you're going to get squeezed out. Just unless you obviously go in the right direction. It's just too aggressive right now. Okay, so under the current conditions, buying anything anything at all is dangerous. Yeah, absolutely, buying anything's dangerous. So a couple of people saying they want to look at gold and maybe the pound against the US dollar. Okay, we can do that, of course. So obviously we know that gold has had a massive kind of sell-off over the last chart on the hourly. So yeah, again with gold, it's a tough one to trade because you have to stick to your view and keep to it. 1 second, guys. Wow, that's a messy chart. Yeah, okay, we know we're looking at the high time frame, so these charts can get messy. But yeah, we saw this massive drop off here. These big selling days. So the market really, again, when we look on the monthlies, is way below the 50% up here now, as I said, and it tested this 50% to the pip. So if you ever want to have any confidence in what Steve Ruffley says, any confidence in Fibonacci, I've been banging on about that 50% at 118014 for as long as I've been on FX Street. So Takes a while, but it hits it, and look at that bounce from there. Amazing stuff. That's Fibonacci in action. So let's go to a more manageable time frame and see exactly what's happening. Well, we've seen the big sell-off. That heavy sell-off the other day, but already, again, we're trading, above the 50% at the minute. So I can't leave that on because there's just too many yellow lines. But basically, this Fibonacci area here has been broken through. Again, these lows, 1281, coming into support. So the market really is, it's kind of trending. Do you know what, guys? That's too messy even for me. 1 second. Let's bring up some cleaner charts. So, dailies. So really the market, sell off, hit the low, 1180, market, again, finds its feet, finds some dip buys, and kind of, rallies back up. So really just trading back to this level here at 132, 150. So this is going to be the key pivot point today. So basically, if we close above that, then the market's still got some legs short term to go up. If we close below that, this market's coming back down. Okay, it's going to come back down. It's got nothing to support it on the downside. So I wouldn't trade gold today or right now. I just look for, on the short term, a close above this level here, 132, 150. Okay, so the more it closes below that, the more likely we are to get down back to that 1180. Once that's broken, it's game over for gold. And as long as we trade above it and keep going up, then maybe, the speculators, the Asian markets will continue to buy up gold and we're going to creep back up. So if you look at an hourly view, then really, again, you can do your Fibonacci on the hourly. The sell-off starts here, gets to a low of here. I'm not going to count this because that really is just an extra spike down. So we're really looking for that 50%. So we're on that 50% now of this down move, and the major target point is up here. So I would say realistically, if we continue going bid over the next kind of 10 hours of trading, then gold's going to continue higher and start to kind of rebound a little bit. If it starts to come down and closes below this 50% line here at 1309, then there's a lot more downside movement. So to be honest, I've already predicted, I've been short gold for a lot longer. It doesn't make any difference to me, what gold does right now, unless it rallies, 1,000 points. So I'm still expecting it to go down, but right now, I wouldn't see any value in buying or selling gold, to be honest. I'd say it's still got more risk on the downside, because that's what people are talking about, and that's in the news. So, yeah, I think there's downside risk to gold, but I don't see anything in the charts right now that make me want to buy it or sell it. So my advice right now for gold would be to stay clear. Okay? Simple as that, really. Pound against the dollar. Pound against the dollar. So pound against the dollar, well, been a nice steady upswing. Again, these are other indicators I like to use. You've got RSI. I've just simply set it. 70s overbought, 30s oversold. Another one, demarcation indicator. Just gives you a good idea of when markets are likely to trade downwards or upwards. So what I do, again, is I've set my 70 and 30 interest points. So when the market is hit above the 70 level, I'm happy to go short on average. So I know it's got to correct. So I hit it here. RSI is just on the 70 line. Market comes down. Yeah? Again, demarcation, way above the 70, up at 90. Nice sell, market comes down. Okay, and it works another way as well. Demarcation below 30. Yeah, RSI low. Hit the low of the Bollinger Bands. Markets go up. So really, I would say in the pound versus the dollar, we're still experiencing strength, but it does look like at some point it's going to top out. I mean, again, this candlestick here is a major shooting star. So after all these days of buying, we see a shooting star. The market should open up the next day and go down. It doesn't. So it squeezes the rest of the shorts out. So I wouldn't be surprised if we see an aggressive, sell-off. And I think the market is definitely going to look to test back to 159918. That's where I think the pound's going to start finding some value again. So we've still got, if the market does continue to break down, 175 ticks. So I'd say right now certainly I'd be shorting the pound against the dollar for sure. Looking at hourlies, it'll give you a bit of a clearer picture. So hourlies again, you want to know how to use Fibonacci? Well, here it is. That's our old friend Fibonacci. This is now specially drawn in that we have a dotted 50% line, 100% line is a red sell. The 161 is a sell. That's an overextension Fibonacci that I draw on from the 50%. So really, look, resistance, finally giving at the 50%. How many times do I tell you? Time and time again, the 50% is key in Fibonacci. Okay? So you don't get a better trade than that. Yeah, you sell the 50% Fibonacci, it comes back and tests it 1, 2, 3, go all the way down. Where does it find resistance again? Yeah, the 100%. Resistance again, the 161, 261. So it's got all the way down to 4-2 spot, the 423 spot 6 Fibonacci. Okay, so it's bounced a little bit, but if it breaks down, there are no lines. If there are no lines, then that means there is no support. Okay, if there aren't lines on my screen, the support doesn't exist because I know what the market looks at. So it's just as simple as that. So if it does break here, then it's got as far to fall as you want. Okay, but don't be fooled. Okay, and don't get too, Steve said it's going to go down, so I'm going to sell. We could easily see this bounce and the up move that we can see here continue, and then it drops. Markets are complicated. Markets are tricky. And if I know these things, lots of people know them. So they'll be letting everybody get short here, anticipating this big break, and go, yes. We're going to push it through a couple of ticks really aggressively, get everybody short, then bang. We're going to take everybody back up to the 161. Or back up to here. Get all them shorts squeezed out of the market long, and then we're going to drop through. Or it could break this level and drop 300 points. I don't know. But I'm telling you that right now, there's going to be a level of interest down here. Okay, so 1671. Okay, if my Fibonacci theory is anything to go by, that the market is plenty overextended for this point, so we could see a spring back. If not, it's going down. But then, there we go, time the RSI. RSI, it's below, it's where is it trading at? 35, so it's getting towards that oversold territory. Demarcation is trading below, so we're looking for a bull reversal. So, you could easily see this scenario like we did in the DAX, and the stocks and the S&P yesterday. Market hits here, it's got nowhere to go, so what does it do? Stops, bang, goes back up here, and then comes down. So it might go short, it might go, offered very, very quickly, very, very aggressively, but know where your out is. What it isn't going to do, it's not going to drop down to this level, is it? It's not going to do 173, it's not going to do 173 ticks in one move. So what I would suggest is try and find yourself a good level of support, maybe here. Maybe here. Yeah, I'd say here is more likely. Okay, so let the market overextend. So I'd be happy to sell into that, but I'll probably be more likely to let it sell off aggressively down to here or so, and then buy it and buy a dip, because I can't really trade against these demarcation RSI figures. The RSI could still got a lot of room to go, and be very, very oversold, but I'd be looking for a bounce back rather than a breakthrough here, to be honest. So that'd be my advice. I mean, like I said, if it's going to break here, you're going to see some force come into the market. So, I'm quite happy to sell this and let everyone scrabble around and figure out where value is. But as soon as it finds a value point, it's going to bounce back aggressively back into the range, because of the dip buyers will be in the market. And these indicators tell you RSI and the demarcation work very, very well together. Demarcation is just another indicator. Very, very similar in principle to the RSI. It smooths the curve of the overbought and oversold. And it's got two territories. So 70, above 70, is like overbought. So the buyers are eventually going to go out the market because the market is too pushed high up for the amount of sellers. Then when it's below 30, too many sellers in the market, so they're going to get pushed out by the buyers. So, try and time the low of a Bollinger Band, the low of RSI, the low of DMARC indicator, to pick your bottoms. You can use MACD, I guess, in the same kind of way. And again, they're not my theories, but they work. I mean, high point, market comes down. Low point in these, market goes up. So, what we see now, what's happened is we've seen a high point. Yeah, market's come down, but not very much really. Then it's gradually come down a bit more aggressively. Yeah, but we're at the lows now. We're towards the low of RSI. So the market could easily break down. But as I said, I don't know. It's not going to go 179 ticks. Okay? So it's going to come down. And then for me, it's going to have to peak back up in the RSI and D mark. So you're going to get a lot of dip buys here. So if you're short, stay short. But make sure you've got some sort of target to get out. So when it does reverse, it's going to reverse quickly. But I think everyone's anticipating a break here. We'll just have to see how far into this black void the market goes. No worries. Okay, so that is the pound against the dollar. Anything else, guys? Anything else you want to talk about? Anything else? Good to see we've got Chris in the room. Had the pleasure of meeting Chris and his wife Jane in Jersey, where I live. We had a nice meal, so that was always good to meet someone in person. You got anything to say for yourself, Chris? Have you been trading? Great. Sam's asking the question. Steve, how does POMO affect equities? I hear the Fed buys equities directly via this action. Is that true? Well, I wouldn't concern yourself too much with what the Fed does. I mean, the Fed do a lot of over-the-counter trades and do a lot of kind of trades with institutions. So they don't, they obviously do dabble in the open markets and they do dabble in, in what's being done. But if you just want to be a good trader, Sam, and you want to be consistent, then you need to focus on what you can control. And you can control what you look at, the time frames you look at, the charts you look at, and indicators you use. But you can't, you can't have any kind of effect on what the Fed does. So it doesn't matter. You're never going to know if the Fed's going to come buy in equities. You never know if the Fed's going to sell and dump a load of treasuries. You just don't know. You're never going to know. So there's no point trying to factor it into your plan. It's all great, trying to understand these things, but I've kind of learned from over the years, you can know too many things, okay? You can know too many things, you can listen to too many things, and you can, try and look at what other people that you think are successful do. But all you can really do is be good at what you understand, what you believe, and be true to that. So for me, yeah, I don't know, to be honest. I don't know if the Fed does these things. I don't know because I don't care, right? That's the honest answer. I don't care what the Fed does. Okay, the Fed come out and tell us what's going to happen and what they're going to do. Then I trade against other people in the market, and and interpreting that data. I don't trade off the back of what I think the Fed's going to do or what the Fed may do in its asset purchase allocation or anything else. I don't care. So what I do is I listen to what other people are listening on, and I trade on that data. That's how I trade technically. I know how other people trade. That's why again, my Fibonacci things work because I know other people are looking at them. And I just have them better laid out, and I just have a better plan. So the man with the plan works. Okay? Only really traded the UK services PMI today, waiting for the USI non-manufacturing. Like to short the cable, get a bit higher as close. Yeah, absolutely, Chris. I can go with that. Yeah, I think the kind of PMI data. Yeah, I didn't really focus on that. Really, to be honest, I'm waiting really for the more kind of bigger political things to come out. I mean, the big thing for me is that obviously no one's going to mention it, but the biggest figure of the month is not going to be released. Okay, so what's going to happen tomorrow? What's the speculation going to put into the market? We saw a weaker than expected ADP, and the markets sold off and then got bought back up. So people anticipating that we're going to get a non-farm payroll, or people anticipating the non-farm payroll was going to be better than the ADP or better than expected? There's going to be a lot of talk tomorrow because traders are like all women. They have, they have nothing else to talk about but the market. So they'll all be sat there going, well, it's a quiet day's trading today. Of course, we should have had the non-farm payrolls. Well, actually, so-and-so from Bloomberg thought it was going to be this. JP Morgan said it was going to be this. So the market will start going off rumours. Oh, Steve Ruffley said it was going to be 170. Oh, well, Steve knows everything. We'll start to buy the S&P. So there's going to be loads of rumours flying around tomorrow. That's why I'm not paying much attention to the data right now, because everybody really, in some respect, in the trading world, is just thinking, well, what's the Fed going to say, or what's what's the government going to say? What are the big traders going to do about there being non-farm payroll? Because what's going to happen if the non-farm payroll comes out on Wednesday, or it just comes out, or it's just told? People are going to make some sort of speculation tomorrow based upon what the non-farm payroll should have come out at. Okay? And then that's going to affect how people hold the positions over the weekend. So I think tomorrow is going to be volatile. I think tomorrow we're going to see action. So I'm going to be holding, trading. Well, I'll be still hosting my events as normal, even if there is no non-farm payroll. But I guess what can you do? If the figure isn't released, the figure isn't released. But it doesn't stop, though. It doesn't stop that speculation, does it? People will still be talking about the non-farm payrolls and what it could have done. So the market's kind of flashing around now, but we're not really going particularly bid in the S&P. We're in danger of the S&P actually, going lower. The Wall Street is, just 1 point now. So I think I was right not to go long the Euro stocks. And I think really now, if you look, if the America does go red, then really, you have to look that really. I think the FTSE and the DAX will follow. So I think it was right for me to say not to go long in the Euro stocks, probably to sell it. So I think once the US does tip back into red, then we're going to start seeing not a major sell-off, but probably a slow grind. The market get a bit lower. So difficult one to call. Okay, Leonardo's just asking, hi Steve, euro dollar, what do you think below 13610, bearish target 13520? Okay, euro dollar. I'll tell you exactly what I think of the euro dollar. I was shorting the euro dollar last night actually, and I held it short and then I took it out, which is the right thing to do because it spiked back up. But I still feel it's got a good way to go down. I think that spike yesterday was a little bit kind of over presumptuous from what we'd said out of Italy. So again, my Fibonacci. This is why I was shorting it the other day. So I let it do this, and then I kind of shorted into here. So I was shorting and I got out here on the moving average in the 50%. Just because I didn't feel that we had the momentum to carry on down. And rightly so. The market then spiked back up. And then, again, 3 times made attempts to make fresh highs. So there's no real resistance I see until, 1.37106. So if you want to go long until that point. From a shorting perspective, I really think that it does want to go down. And, again, we're going to have to look to hold below 1.35999, which is the 100% Fibonacci top that I'm taking this from. So I still think, yeah, demarcation still just coming above, been above 70, coming back down, the RSI coming back down. So yeah, short term, I think 135,804, 136,683. I'd like to see this broken really. Once this is broken, then, we're going to look to get back. Yeah, to one, we can't deny it, yeah, once to get back to here. So it might be a short-lived sell down to this line here at 135,683, but I think then it'll probably continue upwards from there in the shorter term, because that has been the trend, hasn't it? We are moving upwards in this market. So yeah, an aggressive move down that's short-lived. That's what I'd suggest. Close below your 50% as always. Then these are your targets, and then I'd look to buy long and. Probably, I think we're going to get to 1.37106 before the euro dollar finally starts to come back down. And 1.3000 is where I see the euro by the end of the year, for sure. I don't see any future in the euro at all. Okay, anything else, guys? What do I think of the S&P? S&P. S&P, again, on the hourly, same kind of thing, really. Again, like I said, they're starting to move down now, and we've just gone into negative territory now. So, where are they going to go to? Well, going to go to the moving average, really. Go to the moving average, test that, and if they break lower, 1.67756. Yeah, maybe they'll lower the Bollinger Band. To be honest, like I said, I'm not probably going to trade at all this afternoon or this evening, because I just don't see any value until I hear some comment or someone at the US with any kind of power tell me what's going on. I think what everyone's anticipating is that when the markets have gone up bid, that they will sort it out. So when they do sort it out, then the market's going to bounce back up. But then again, we can see, the market's, really kind of pushing down now. So it's going to test here. If it breaks through here, the moving average, then 1677 spot 56. That's all it can do. From there, it might bounce up or continue down. But that's where it's going to go to. So good job we didn't go long, the Euro stocks. Didn't feel right, so I didn't do it. But also I didn't really kind of feel that it was going to go short. Again, you can see the demarcation indicator, we've hit that 70. The market's coming back down now. So we're at the 50% territory of the RSI, so we can go either way from this point. So, yeah, if that's enough for the S&P right now, then yeah, we can see this level broke and 167756. Do I really want to go short into that? Nah, not really. What I'm going to do, I'm probably going to sell some DAX, to be honest. DAX or maybe some FTSE. The FTSE's been high up. Let me look at the DAX before I do anything hasty. So there's no need to rush, guys. I mean, that's the whole point of these kind of things. Markets can do what the market's going to do. There's no point trying to jump in. So, got a Fibonacci on here for whatever reason. I don't quite know what that's on there. But, yeah, I mean, I guess we've got the target for the gap. 8559 spot 5 is a level that I've keep banging on about my technical analysis. So the S&P does continue to rally down, then yeah, this is definitely going to be a point where the DAX will test, and if it breaks, it's already started to close this gap, and it will go to 261 spot 8. So yeah, that could be an opportunity to short the DAX and get, you'd be looking, 100 ticks out of that. But, don't know. Dangerous trading at the minute. I don't know. I'd love to be able to sell a DAX right now. I just don't think I want to. Just don't feel confident in it. Because I think what the DAX will do is like it did the other day. It will aggressively get all the people short, and then it will spike back up as it does, and I'll end up trading, by the end of the week, 87780 or something. So, don't know. Sorry, I can't be more help at the minute, guys. I'm being a bit vague, but today is a day for sitting on my hands, to be honest. I don't get a good vibe from the market. I don't have anything fundamental to go off. I don't have any good data to go off. I don't have anything. So my advice as a professional trader, risk manager, chief market strategist would be to sit on your hands. Sit on your hands, see what happens tomorrow. Okay? Because there will be speculation. There will be lots of chatter about what non-farm payrolls could have, should have, would have done. And that will move the markets. Today, I see nothing but pain. Pain and getting ragged around and going short, going long, and not really getting anything out of it. So I'd wait for tomorrow. That'll be my real advice. Okay, Manjo to St. Steve. One of the FX Street presenters suggested that CQG platform and charting is the best as it's used worldwide. Any comments? Yeah, I use CQG as professional trader. I've used CQG for over a decade. It's good. To be honest, MetaTrade is just as good, and it's free. Charts are what you make of them. Charts are just data. Everyone has the same data. Charts are just how you display them. This is how I display mine, because that's what I understand. So I don't have the white candles, on the white background, and the black candles and the green, all that kind of stuff. I have what I've always had. I have red and green candles because I understand them. Red lines for selling, green lines for buying. I have my RSI and demarcation on because I understand what they do. So that's how I look at charts. It's, that's as simple as I can make trading. As I said, all my lines are automatic, so I always know in any product where value is. That's how I trade. It's as simple as that. So I can do that on free software. So yeah, CQG may be the industry standard. I'm deemed to be the best. Would I spend 300 quid a month or whatever CQG was? No. So that's my answer to that. Steve, is there any book out there you can recommend for you to study more on Bollinger Bands? No. Not that I know of. Best way to study Bollinger Bands, open up 8 charts, put them on your screens, put your Bollinger Bands on their hourlies, and watch them. That's how you learn Bollinger Bands. Break above, hit a key level of support, Market is overbought. Market is above the bear reversal. Market then, outside Bollinger Band, comes back down and sells to the moving average. Break the Bollinger Band, back to the moving average, back to the lower point. Break this, close outside, 1, 2, 3. Can't go any lower than this level of support. Market comes back, eventually gets to moving average. That's Bollinger Bands. When we trade outside of them, look to get back into them. That's as simple as I can make Bollinger Bands. They don't like being out the Bollinger Bands for too long. They have to come back. So tie that in with RSI, tied in with DMARC, tied in with MACD. So look for your bottoms and tops when they trade outside of the Bollinger Bands. That's how you trade Bollinger Bands. John Bollinger is a great technical analyst. If you just Google him, I'm sure there will be a book on it. But yeah, you don't need books to learn technical analysis. You just need me. Okay, guys. Well, that's pretty much my time for this session. Thanks to Maud, Vicky, and the guys at FX Street. Like I said, maybe there is some opportunities in the market. Personally, I'd sit tight till the non-farm payroll non-event. Anything else you want to know from me, guys? At Steve Ruffley is my Twitter handle. I'm always around and always available to chat. Okay, guys, always a pleasure. Cheers, guys. Speak to you all very soon. Good afternoon.